All right, welcome back. You're watching Buy Now, Sell Now. It's time to take our viewers through the high risk and low risk ideas from our experts. I'm going to come to you first, Kunal. And just a reminder to the both of you, if we can keep the answers a little short because we have to launch straight into the query segment. Kunal, what are your ideas for us today?
Two buy calls, Alex. First one which I'm suggesting is a buy on Muthoot Finance. I'm sensing many of the gold finance stocks to make a very strong comeback. So suggesting a buy on Muthoot Finance for a target of 1280, 1300 levels. Stop loss to be kept at 1170 mark. And the second one which I'm suggesting is a buy on UBL, that's United Breweries. After quite some time, the stock is making a bullish pennant breakout. So would suggest a buy for a target of approximately 1300 and stop loss could be kept at 1200 mark.
Ashish, what are your high risk, low risk ideas for viewers?
My high risk idea and high return idea which can give good return is HFCL. Though I'm not like telecom sector, but I like companies which are providing support to telecom sector. So this is a company which came out with excellent set of numbers for March quarter, and I'm expecting same run rate to continue. Just imagine the previous March they reported net profit of 6 crore, and this was around 86 crore for the last quarter. And I'm expecting same run rate to continue. So if I see the valuation wise, the stock is just available at 13 price earning multiple from FY 23 earnings, which is quite attractive in my view. And defense, 5G, and broadband will continue momentum for this particular stock. So a must add in the portfolio. Another low risk, low return idea which I like is JBM Auto. This is a company again which is available at very low price earning multiple, and they are primarily into auto ancillary and moved into the EV buses also, and where they are getting very good response. They are having almost 700 buses which cost almost 1 crore per bus to be executed in next 1 year. And I'm expecting this company from turnover 2,000 crore in next 3 years can even touch 5,000 crore kind of turnover. The way momentum is there in each segment. Company is going to come out with very good results also for Q4 tomorrow. So I'm expecting the run up will continue in this particular stock. And my target for the JBM Auto for next 3 months is 600 rupees.
All right, on that note, let's launch straight into the query segment. Quite a few of you are tuned in live on social media and you've already posted your questions. I do encourage those of you who have not put their names in their handles to tell us what your names are and what your duration is, the query that you're asking. I'm going to start with a mail query though. This one is come in a couple of times. Sagar is asking a question about Varun Beverages, and I'm going to take it across to Ashish. Ashish, for a fundamental view, would you recommend a buy for Varun Beverages, and very quick rationale as to why?
Yes, if I see fundamentally, company is quite strong. Last quarterly numbers were pretty good also. But only one hitch is there that because of the COVID and COVID factor, their lockdown at various cities and states. So the demand for beverages particularly has come down per se for their main customers like Pepsi and Coke, etc. So some slowdown is expected in their earning also. But in my view, at 950 rupees, this will be a good price to enter in Varun Beverage for long run, because again, companies fundamentally very sound long-term contracts and everything is there. So, and stock has also corrected by almost 200 rupees from 50 week high. So 950 will be good entry point.
All right. Moving on to our YouTube query, and this one is coming in from Nino Kurvilla saying that can you suggest the short-term target for Quick Heal, and is it prudent to enter this particular counter at current levels? Kunal, how is the counter of Quick Heal looking like? Also, given that it is reacting to earnings, so you're seeing the sharp uptick, so does it make sense to enter at this level now?
Well, I think it's difficult because I think this is a big gap up for Quick Heal. The stock has not seen this kind of a gap up, at least in the last 10-12 months. So it would be prudent enough to wait for at least a couple of days and then probably sense that whether this is just a gap up or a one day reaction specifically for the earnings, or whether this is a gap up which should sustain and probably take the stock higher to a new range altogether. If that's the case, if the second part plays out where you see the stock gradually moving up higher and there are no phases of correction, then I sense that buying the stock even at for example currently it's at 210 levels, so even if it's at 220 levels, it could be an attractive buy even if the stock moves up higher, because then it would indicate that it's moving to a new range altogether. And then from a short term basis, I would suggest that keep a target range closer to 245 to 250 range on quick heel.
Okay, let's also pull up the charts for NTPC and look how they've done over the past month or so. It's actually done reasonably well, and this is, Kunal, in the context of a market that has not been trading on very, very firm footing, right? We've got a question coming in on YouTube on NTPC. This one is from Danny Verghese. He's bought at levels of 98 and he's looking for a short-term period. He's in the green right now. Should he keep holding?
You should hold. I think I would advise that the viewers should hold on to the PSU breakouts. It's been a very strong breakout for many of the PSU stocks, and they have these odd tendencies that whenever they rise up in momentum, the momentum is very fast. Traders tend to catch on to the momentum at the upper end of the range, and then these stocks go through a bit of a pause. So I think it's now going through a bit of a pause period. If you're in from I would say short term to slightly medium term, say for another 2 or 3 months, then I would sense that NTPC and such other stocks from the PSU pack, they would probably see one more rally on the upside, and that rally could take the stocks higher by another 10 to 15%, at least on a moderate basis. So I would suggest a hold on NTPC, and if you've bought at lower levels, I think that's a good enough buffer that you've built in to hold on to your stocks specifically on this name.
Our next query is coming in from Joby Sebastian, saying that he's holding on to L&T Finance, which he bought at 70 rupees per share level since the last 7 years. Please suggest whether he should hold or shift to another stock. Ashish, what's your view coming on L&T Finance? Joby has bought this counter at 70 rupees and he's holding it for the last 7 years. So what should he do? Should he continue to hold on to this particular counter or shift to another counter?
If you want to remain in the same segment, then I'll advise to exit, because this is a laggard. If you talk about the performance in last even 7 years, you see other stocks where they have reached an NBFC, but this is a stock which has not moved because share the way of working, that is, they are more into infra funding, and their other businesses are also having some pressure. So the kind of results which is expected out of NBFC is not forthcoming. So my suggestion will be to exit from this stock. I'll suggest two alternatives. If you want to remain in same segment, then EV Capital hold good potential. Otherwise, if you want to remain in same price segment, then I'll also suggest Subex Systems is a good company to invest at this price.
All right, interesting. Let's look at a small cap company, and I'm hoping, Kunal, that you have a view on this. This is Bharat Bijlee, and it's currently trading at just under 1300, market cap of about 750 crore rupees. We've got a question coming in from Sagar. He bought at levels of 950, so he's making quite a bit of money on this trade. He's wondering whether he should hold for further upside potentially, or should he book profits at this point?
It's a short-term trading call which the viewer has taken. Then I think it's a good enough profit that you're making of approximately 30%, 33% on your holdings. For Bharat Bijlee, that's BBL on the NSE code. So I think in that kind of a time frame and context, you can book out profits. But then look at it this way: that if you're looking to build something from a long term and trying to invest in few of the large cap PSU names and then hold on to it from long term, hoping that many of these stocks could probably give stronger returns, then I think in that aspect you should shift on to some other large cap names on the PSU side. So something like maybe an ONGC, a Bharat Electronics, BEL, even a BHEL, that's Bharat Heavy Electrical. I think these stocks, they look fairly attractive to me on the longer term prospects. So it depends on the kind of time frame and the kind of trading mentality which the viewer has. If it's specifically to short term, then I would suggest booking profits over here and then shifting on to some other quality large cap names on the PSU side.
Next query is coming in from Sherry, wants suggestions on buying Dr. Reddy's June 5500 call. Kunal, what's your suggestion on that?
500 call would be a bit of a stretch for Dr. Reddy. That's what I would believe. I would sense that the stock is going through a correction consolidation mode. Indicators are coming back into bearish. I would not say bearish, but a bit of a reversal territory for Dr. Reddy. And you've seen multiple tops for the stock around this 5,500 mark. So ideally, as a trade, you have to wait for a breakout. That the stock breaks out of that 5,400 mark. Only then you can probably buy at the money call option, because then time value would be of most critical importance to you, specifically if you're buying the option trade. So I would suggest that look at this trade as a possibility only if the stock breaks past about that 5,400, 5,450 zone, because that could lead to a triple top breakout for Dr. Reddy.
Okay, I'm going to come across to you, Ashish, on this next one. We've got Anup Kumar, who's bought Ircon International, and he's bought it in anticipation of the corporate announcement following up with regard to the bonus issue 1:1. On the fundamentals, though, should he continue holding the stock?
Yes, I think you can continue to remain invested. It's a pretty good company. Stock is having good momentum also. So my suggestion will be to remain invested here, and you will get good returns over a period of time. So remain there.
All right, our next query is coming in from Valan from UAE, saying that he has 600 shares of Zee that he's bought at 205 rupees per share. He wants to know whether he should hold, switch or add on to this particular counter. Kunal, what's your view coming in on Zee? 600 shares at 205 rupees per share.
Because the stock is marred with so much of news flow, which comes every now and then and probably disturbs the trend for the stock. So I think even 3-4 months back, the stock had gone through a very similar fate when I think just about pre-result, the stock had come back to 250, 255 levels, where it seemed to be more of a strong candidate of breakout. And then post-result, we saw the stock falling down once again and coming back to that sub 200 level. So it's a stock which is marred with a lot of these news flows as such. So it becomes very difficult to try and give a stronger view on the upside. But then I think if you're looking at some contrarian or some other alternative from the media stock, then I would recommend something like Sun TV. I think the stock has changed its characteristic. It's now become more of a buy on dips candidate. 500 seems to be a good enough support level for Sun TV, where it has tested almost this level 2 or 3 times in the past 1 month, and the stock has managed to bounce back. So I would suggest a better alternative, that if you can shift from Zee, which could be a bit of a high beta stock, to something of a low beta to moderate beta stock like Sun TV, I think it could be a prudent shift from that sector.
All right, we've got a question for you, Ashish, on fundamentals. We've got Padma, who has 50 shares of Alkyl Amines, bought at levels of 2,400. She mentions post-bonus. And this is a stock that is under pressure in today's trade, down about 4.5% or so, but it is significantly above her buy price. Would you advise her to continue holding, and what's your view on the fundamentals?
The issue is, from 700, the stock has seen a run up of almost 3,900, all within a period of 1 year. So this is the time where people are taking money off the table in chemicals or in metals, etc., and looking for newer segment, because valuations are quite rich. So my suggestion will be again to exit from the stock, though fundamentally nothing wrong with the company, but as there's a vertical rise in these stocks, so some correction is warranted, and I also advise to exit from Alkyl Amines at this point of time.
Our next query is coming in from Santi on Amara Raja Batteries, saying that the stock is continuously falling from this highs that is hit in February. Wants to also know that what is the reason for such high bearishness on the stock. Wants to know what sort of level can he or she look at to enter over the longer term, as this particular counter is likely to get benefited from the EV play as well as the PLI scheme. So Ashish, how is Amara Raja looking like? Do you have any target in mind that you can look at to enter this particular counter for the longer term?
Yes, I think now the fundamentals are changing. Government is also giving a lot of emphasis on battery segment, battery storage, etc. Some PLI of 60,000 crore was announced. So some momentum is again going to come in all the battery plays. Only the issue was that earlier the stock has moved up quite a bit from almost 600 rupees to 1,000 rupees. So some profit taking is again happening. But as far as fundamentals are concerned, there is no concern as such. Company is coming out quarter over quarter, good set of numbers. And my suggestion will be to start accumulating Amara Raja at this point of time. We will again see 900, 950 kind of price maybe in next 3 to 4 months.
Okay, we've got a question on options, and this one is from Ritesh Garg. Kunal, for you. Bought Adani Port May 800 call at a 37.8 strike. What would you recommend that he should do? Should he exit at this juncture?
You can hold on to your investments over here on Adani Ports. 800 is not a very far or deep out of the money option for the stock, and it's been largely in this range of 740, 730 on the downside and closer to 800 on the upside. I would sense that the market goes into a resurrective mode like what you're seeing today. Even for the next couple of days, large cap names like Adani Ports could probably potentially see a breakout. So I'm not sure of the exact current market price for the 800 strike option, but I think if you've been holding on since last 2-3 days, then I'm sensing that it's very, very close to your cost price itself. I would suggest a hold. Wait for the next couple of days. If the market gets back into traction, then I believe Adani Ports should break past about that 800 level.
All right. Coming once more to you on this particular counter, Kunal, and this is Sandhya Rao talking about Sun TV. She's holding this stock since the IPO time, bought 40 shares at 220 rupees per share. Wants to know what's the short-term view coming in for Sun TV.
As I was mentioning earlier on the Zee query, that Sun TV is one of the stocks which I think looks fairly attractive from the media stock. It's been more balanced, more stable, less volatile, and somehow closer to this 500 mark, plus or minus 10-12 rupees odd. You tend to see a lot of support building on for Sun TV. So I would sense that 500 should be a good level for you to keep on averaging, or average if your buy price is on the higher side. I would place a short-term target of at least a 560 to 580 levels for Sun TV, and given that, I would suggest a time frame of at least another 3 to 4 weeks.
Coming back to you in this next one, Kunal, we've got Rajan Vittal who's asking about insurance space. I believe we had spoken about this last week or the week before that. He's got two counters that he's considering though, SBI Life and ICICI Pru, and he's looking at a 6 to 12 month time frame. Which one should he pick?
Frankly, Alex, because both of these stocks, they look fairly attractive. In fact, we had done this analysis as well on the top 3 names from the insurance pack, that how HDFC Life, SBI Life, and ICICI Pru have fared over the last 12 months particularly. I see that probably both these stocks, SBI Life and ICICI Pru, have just recently given a strong breakout on the upside, and they've managed to outperform HDFC Life over the very near term. So I think just purely on the basis of the short-term momentum and a surge of momentum into these names, I would suggest that you can probably look at SBI Life as one of the potential breakout candidates. And if you're looking at some of the other stocks from the insurance, then I think even an ICICI Lombard, just a shade below that 1500 mark, I think also could be an attractive short-term buy.
The next query coming in from Tony Anthony talking about Radico Khaitan. How does this counter look over the longer term? He's holding this Radico Khaitan, which he bought at 500 rupees per share. Ashish, how is Radico Khaitan looking like? This particular stock saw a sharp run over the last, I believe, 3 to 4 months. So how is this counter looking like over the longer term?
Yeah, fundamentally very good, and consistently they are reporting profit of 70 crore rupees quarter and very low on debt also. And like in consumption space, a good play as such. But only thing is, because of again this lockdown, the availability of liquor is also a challenge pan India basis. So we may see some sort of pressure in top line in this particular quarter, and this is the reason the stock is also witnessing some amount of selling pressure. But if you are having long-term horizon, you can continue to remain invested. For next 1 year, my target for the stock is around 650.
Okay, Kunal, I'm just going to take a chance with this counter, and I'm not really sure if you're going to have a view. It is seeming to be quite a volatile counter. Sport King India is the name of the counter, and the viewer has bought into the counter and is wondering whether to hold on. Do you have a view first of all, and would you be able to give us something that we can use?
Really, Alex, I don't track the stock. I think it's BSE listed as far as I can sense from the holdings, but I don't track the stock that often.
I'm going to go across Ashish to you. And this one's from Tony Anthony. He's got Radico Khaitan for the long term, bought at levels of 500. Would you recommend a hold on that?
I just gave my view.
Sorry about that. Let me then come across to you for Cipla. Earnings just came out. Sudarshan's got a question on this. Bought at levels of 660 for the long term. Should you hold a book profit?
So my session will be book profit. In my view, again, wherever results are not in line with the market expectation, some profit taking expected, and which is happening in Cipla also. So you are sitting on decent profit. My suggestion will be to book gains in Cipla one.
All right. Our next query is coming from a YouTube handle name VPJ25. Next time, would request you to write your name as well. He's saying that he's bought Westlife Development 200 shares at 500 rupees per share. He wants to know whether it's worth holding on to this counter or should he take a stop loss and exit. Also, he does not mind holding the stock for the longer term. So what's your view on Westlife Development, Kunal?
It's a good stock to hold on. It went through a rough patch, I think, in the month of March or end of February and start of March, where it corrected from 500, 520 levels to 400. But I sense somehow that the correction seems to have gotten over. Few of the indicators which I look at, like MACD, for example, has come back into positive territory, which means that it's just a matter of time that the stock will probably end this consolidation and then head towards a trending move on the upside. So if you bought at higher levels, I would suggest that look at 420 as a good averaging point for Westlife and hold on to it from at least a medium term to longer term view. I would sense 500 to 520 as a potential target over the next 9 months to 12 months.
Okay, Senthil Jaikumar has got a question on Adani Total Gas. Ashish, coming to you for this one. He says he's got a long-term view, but he says it's for 1 year. So it's a bit of a contradiction there. But would you say that the counter is something that you should consider?
It's the kind of run-up we have seen in Adani Total Gas. The kind of returns this stock has given is huge. I think this is one of the best performer stocks in last year in that market cap segment. But again, the potential is there, number one, because still India is opening up and pipe gas is not available in every home of India. So till the time this pipe gas will reach to every home, then there's a consistent revenue model because every month you will keep on getting billing. So this is the reason we have seen good interest from the investor fraternity to accumulate this stock, and now Total is also shareholder. So this is a stock which you can even hold for 1 to 3 years. You are going to get very good return with a very limited floating stock in the market. In my view, this will continue to do well coming time.
Right, our next query is coming from Krishna Kumar from Chennai. He wants to know about ITC. How is this particular counter looking like? He has 360 shares that he's purchased at 221 rupees per share. He is a long-term investor, so he just wants to know how does ITC actually look over the longer term. Needs some clarity on that particular front, Ashish.
ITC is a stock where I think most of the retail traders always get stuck up in whenever they buy this stock and doesn't move. So my suggestion will be not to chase ITC per se because we don't know when this stock will start again its bull run or when it will cross its 52-week high or 240 once again. So my suggestion will be to look at more other FMCG play like Marico, which came out with a flying set of numbers. At the same time, even I like HUL also in this space. So ITC is a avoid front my.
All right. On that note, I'd like to thank both our experts, Kunal as well as Ashish, for taking the time for answering the questions that you did answer. To everyone who's tuned in live on social media, if you've not got your query answered today, we'll be back tomorrow at 11:15 and you can get your query answered at that time. We're slipping into a short break, but more on the other side, so do stay tuned.
Co-powered